Good afternoon, traders. Chris Buss here with Traders Profit Compass with your midday market pulse for Thursday, April 22nd. Okay, I'm going to quickly run through the indexes and FANG names. Then I want to bring your attention to a couple of charts I found interesting this morning. SPY, 30-minute chart. We identified the 416 as the pivot level today, and you can see that SPY has just not had the horsepower today to get through that level yet. So we've spent, let's see, all day. 6 candles, 3 hours. We're still right here at 416. Keep an eye on your momentum. It looks like it's rolling over here. If you wanted to take, a tactical short here, with your stop just above, that's perfectly all right. With momentum in this posture, I think odds favor a little pullback, but just honor your stops and be out real fast if there gets to be some buying pressure. But given that we haven't been able to get through it so far, you may see a little pullback here this afternoon. Same thing with the Qs. Right up here at our 339 pivot, has not been able to take it out. And also you've got, you can see momentum beginning to roll over and RSI having difficulty at the trend line. IWM, this is the way it's supposed to work. Okay, we identified 223 as the pivot. We had an opening break above, and then they brought it back, filled the opening gap, even went a little bit lower. And you could have bought in here. If you're on top of it and you got this double touch down here at 221.50, that's great. But here at 223, on the reclaim of this level, that was a very objective place to buy. And we said the target was going to be 225 at the top of the range. And you got that to the penny. You can see where price stopped right there. And now we're hesitating right below overhead resistance. So if you didn't catch that trade or aren't in it, now 225. This low, actually it's a little bit above, maybe 225.10, something like that. But you can see the level here that we've got on a break above. Then your next target is 226.25-ish. Facebook, nothing going on today. As far as I'm concerned, it's got to reclaim 305, which was the original breakout level. I'm not going to touch this while it's just, thrashing around in here. I don't think there's much directional movement or impetus here. I want to see a breakout above 305, recapture the original breakout, and then look for 310. And then on the downside, it's got to hold 298, or it opens up the potential for a deeper pullback. Apple, 134, we said was our pivot. It has stalled there, so don't front run any move. Wait for a breakout above 134, and then I think you got 135, and then potentially 137 to the upside. Tesla, 750. Made a try in the morning, that failed. So now we're back in the soup, trapped between 725 support and 750 resistance. I think this is all chop in here. I would wait for either a breakout above 750 or a pull into 725, which would give you a nice objective long entry against 725, and then you can look for a bounce back up to 750 and potentially a breakout. Remember, Tesla, I believe, has earnings on Monday, so be aware of that. I wouldn't, you can play for Friday or Monday. I think they report after the bell on Monday. I mean, you can mess around with it before then, but unless you're really sharp or really bold, I wouldn't mess with it into earnings. Let that clear, and then we'll pick up the ball after that. Microsoft, again, I mean, the story's been the same on these FANG names and the Qs. No horsepower here. I think you got to wait for 161 to get taken out, and then you're going to be in blue sky. You can reset all your stops and strikes to move up to 261 and then look for a push. But until then, it can still pull back to 259. And yeah, so I wouldn't be front running anything. Amazon has pulled back to 33.50. So, I mean, if you want to take a long here with a stop just below, that's very objective. You know, I haven't seen a lot of, activity in the fangs. So, I mean, if you're looking for something, by the end of the day, you might be disappointed. But, if you're willing to hold until tomorrow, which is always risky, you can always try that. But I don't see enough going on here today to think that, this is, the opportunity of a lifetime or whatever. I mean, you can break it down on a 5 or, 15-minute chart. But, I mean, we are at support. So if you want to try something long, it's definitely objective. Same thing with Google. Our pivot was 2270. We're back there now. I think this is more of a longer term trade. As long as this holds, you can stay long and look for a move up. I don't know when earnings are. I would check that if you're going to try and swing that long. But 2270 is support. As long as that holds, everything is fine. Netflix broke our range. We had this nice bracket trade set up. Here was the high of yesterday, and here was the low, and now we've broken below. I want to show you, let's see if I can get it here. Yeah, this is the daily chart. We're hanging right on that 200 EMA that we talked about this morning. We do have another level of support here at, let's just call it 495. It's got to hold that. It's got to hold that. If it doesn't hold 495, it's going to 470, no doubt about it. So use your best judgment. I mean, you can be long against the 200, but much below that, you're going to go to 495 and then down to 470 if it doesn't hold. So anyways, I would use the 200 myself, which is at 503. Semiconductors got rejected at our resistance level here at 249. Now we're back below this prior gap area. As far as the long is concerned, the long opportunity was yesterday at this prior breakout level at 242. Now I think you've got to wait until this 249 is taken out, or a deeper pullback into the bottom of this range, or even back to 242. I wouldn't take it here personally. You're kind of in no man's land with space below it, so it's vulnerable. And with the Qs soft in general, I don't like taking that long here. I don't think you've got enough to shoot against. I noticed that Micron was on the biggest loser list, one of my biggest loser lists today, in the semis, down over 4%. But you can see this 85 is a critical level. You lose 85, there's not a lot stopping it from going down towards 77.50. So be cautious because it's below all the moving averages and at key support. So if things get soft here and Micron loses 85, you may have a very objective trade down towards this 77.50 level. And notice that's more or less, I mean, you've got the rising 200 here at 72.5, and you've also got this prior uptrend line here. So I think that would be an area of interest. If it did pull in here, you've got a support level right in this area. So anyways, that's one to watch as it has lost the 50 EMA, which is important. I want to bring your attention to the Baltic Dry Index. This is the rates, the tracking information for dry bulk shipping. Your iron ores, your coals, your grains, all that kind of stuff. And you can see here, this is a 15-year chart, and you can see that we're breaking out here to essentially 10-year highs in the rates for shipping. So that's substantial. You can see at the lows, we were down here in the 400 range, and now we're up in 2700. I can see it easily going up here to 4500, which were the prior highs. And you got to remember that a lot of capacity has been taken out of the shipping sector, not only because of new environmental regulations, but when you're operating down in this area for a long time, there weren't a ton of ships being built. So I'm not an expert on the shipping industry by any means, but there are some capacity constraints that are out there, and you're seeing that along with the demand pickup as COVID opens up, et cetera, et cetera. This is all part of the reflation trade. So you got rates breaking the new highs. And remember, it's one of those fixed cost things. Once you've got your ships, and you've got them staffed, that's your cost, right? So any increase in your day rates for shipping, there's no incremental cost to it. So it all goes to profit, essentially, right? So as these rates climb, the marine shippers are going to see more and more profit fall to their bottom line. I want to bring your attention to one chart. And there's a bunch of them. If you want to go through the marine transport sector, there's a ton of charts that are continuing to run. This is Navios Marine Partners, symbol NMM. Got a nice flag, and now we're breaking out above 30. So that opens up some more upside in this chart. I like this one long. I saw some not heavy option activity, but guys looking out to September, June, buying some time. I believe earnings are May 13th, so keep that in mind. But I expect earnings to be good because of the rates that we just talked about. So I like this one long. I wouldn't get too far out over your skis ahead of earnings, but that would be one where I'd be willing to take a little bit of a shot. I normally don't hold through earnings, but if you keep your position size small, I'd be willing to take that shot. But here's the real interesting chart. This is a weekly chart going back 10 years. This used to be a $200 stock back in the day. And for a long time, it held 90 support. And then the bottom fell out in 2015. And it's been below 30, 31 ever since. And now we're knocking at the door. Notice this huge volume over price void. There is nobody home in this area here. You break out above 32, 33. And if the price is able to hold that, you got a lot of running room there. You got a lot of running room. And don't forget, this is log scaling. So, I mean, to go from here to here, that's 60 bucks. That could be a massive runner. And, you know, we're still early in the reopening trade, right? I mean, India, all of Asia are loaded with COVID, and Brazil loaded with COVID. As these guys get this under control, assuming the reflation trade works, something like this, if it breaks out and holds, I mean, you could camp out in there for 2 years, at least through the end of this year, I would think. And if those rates keep climbing as demand picks up for everything, I like this trade. I like this trade for a long-term kind of a thing. I wouldn't view this one as a big trading vehicle. I would see if we get this breakout, and you can see on the daily chart that it is breaking out. You break out above here, there aren't any natural sellers until you get up here. People that got trapped up here at 90, they might be saying, wow, I'm glad to get my money back after 5 years, right? Those guys might be motivated sellers if they got stuck holding the bag. But there could be some massive rip here above, 32, whatever. So anyways, check out the marine shipping sector. It remains hot. You've got the Baltic Dry Index rising and breaking out. I think it's a place that deserves a close look. Okay, if you like the content, please hit the subscribe button and the alarm bell. You'll get all my content. You won't have to hunt for it. You'll be notified. Also, over in the show notes, you can register for all my intraday updates like this. You'll get a nice email. You won't have to hunt for it. And for you longtime listeners, I really appreciate it. Pass the link along to someone that you like and that can use some help with their levels. I think I'm good with that. And I think if you focus on executing around the levels, just like we showed with that IWM trade, that was plain as day. And if you work on your execution around those levels, I think you'll do very, very well. So this has been Chris Buss with Traders Profit Compass. Have a good rest of your afternoon trading, and talk to you next time.